We look now at whether the turmoil in Thailand is going to jeopardize growth across Southeast Asia and also taint this bullishness we've had over emerging markets growth. Joining us is Danny Tenengauzer. He's the head of emerging market economics and fixed income strategy. Excuse me, at Bank of America Merrill Lynch. In the meantime, it's such a long title. God, Danny, it's such a long title, I choked on it. But in any case, okay, so this Thailand mess that we're seeing, how much is it going to affect growth?
Well, we expect would forecast to shave growth between 1 and 2 percentage points of GDP. Again, they have shut down the business center in Bangkok. We also expect this to dampen domestic demand a little bit. So we would expect, instead of growth somewhere around 4.5% for this year, more like 2.5 to 3%.
Okay, so growth in Thailand, but is that going to have a spillover effect in Asia?
We don't think so. At this stage, the main risk would be really political contagion, so contagion in terms of political uncertainty to the rest of Asia. We think that the elections in Indonesia last year were very, very stable. We think that Philippines went just fine a few weeks ago, so we don't really see risk of political spillover.
So vis-a-vis Europe then, Danny, I mean, is Thailand, is Southeast Asia, emerging markets still a safer bet than what we're seeing in Europe?
Yes, we believe so, and that's mainly because the data is so much better. I mean, even for Thailand, we're seeing a trade surplus, a current account surplus, still at 4 to 5 percentage points of GDP. All those countries, especially Southern Europe, are really registering 5 to 10 percentage points current account deficits to GDP. So it's a very different fundamental story.
But going forward, though, I mean, you're seeing the euro fall every single day. I mean, that has got to, though, cut into the competitiveness of places like Thailand and other parts of Asia.
That's correct. But again, we still believe that at the current range, the euro is trading at fair value. And that's actually one thing that came out of the IMF yesterday. They clearly mentioned that the euro right now is trading very near fair value. A competitive currency should be trading quite a bit weaker than fair value, and we're not quite there yet.
Now, Danny, just very quickly, you know, those of us who were watching that Asian financial crisis back in '98, I mean, it was started in Thailand. It was a devaluation of the baht that started it. So, I mean, how are you confident that what's starting now in Thailand isn't going to spread, though, throughout Asia? That's, you know, history tells a different story.
That's correct. That's correct. I mean, clearly that brings concerns and there are risks, but there are two huge differences between now and 12 years, 13 years ago. The first one is that the Thai baht now is not pegged. So, you know, it could float and weaken and that will be fine. So that's point number one. Point number two is that I have a current account surplus.
Okay, right, which gives it a protection. Okay.
Exactly.
All right, Danny, good to have you with us. And I was only joking about your title. In any case, Danny Tenengauzer, the head of emerging market economics, fixed income strategy at Bank of America Merrill Lynch.